Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com and on X using the handle thekouk, Thekouk. Stephen, good morning.
A very good morning to you, Sean.
Now, wasn't much going on last week in terms of economics, but I think Donald Trump probably made up for it.
He did, and it's very hard to work what he made up for, other than lots of chatter about policies and a range of social policies he sort of got rid of by decree sort of thing. And that's not unimportant, but we'll let other people discuss those. But from an economic perspective, the chatter about tariffs caused a bit of volatility in the market. The chatter about DOGE, or the Department of Government Efficiency, starting to wind back a few programs, got a few people excited about repairing the US budget, which does need repairing. But then on the other hand, the talk of tax cuts will undo some of that fiscal consolidation. So the markets had plenty to go on, even though the hard data on the economy was pretty sparse.
Let's talk about this week. It's a massive week. I mean, given we're only the first month, this could be one of the biggest data days, the CPI data for December of the year. And that's an early call in the first month of the year, Stephen.
It is an early call, but I think you're spot on that all eyes have been on this December quarter inflation data, which comes out on Wednesday, as being a real catalyst for what the Reserve Bank will do with monetary policy. And the market has got a high probability of a rate cut priced in prior to that number being released. Of course, that may change after the number comes out, depending whether it's high, low, or in between. But really, the Reserve Bank have held off doing what a lot of other central banks around the world have done, and that's they started cutting interest rates 3-6 months ago. The RBA said, no, we're not going to cut because we're still worried about trimmed mean inflation. We're worried about services inflation being sticky. We're worried about a little bit of residual excess demand in the economy. So they've held off until now. And what Michelle Bullock, the RBA governor, has been speaking about is that if inflation clearly tracks lower, then yes, the door is open for a rate cut. So that's why we, economists and traders and everybody else will be sweating on what that number or those numbers on inflation will actually be on Wednesday.
So what do we need to get a rate cut?
It'll be the trimmed mean number that will be the driver. And that is the sort of underlying inflation. It excludes a lot of the volatile items. And we know that in the last few quarters, there's been a lot of government subsidies on electricity in particular, but dwelling rent. And in Queensland, we have the 50-cent transport fares and a few other bits and bobs that have gone into that low headline figure. So the RBA does say that they don't take account of that specifically. The trimmed mean, the underlying measure. Okay, if we get a 0.6% quarter-on-quarter increase, which still leaves the annual rate above 3%, by the way, but it's that momentum that's coming down quarter by quarter by quarter. If we get a 0.6 or less, I think it's game on for the rate cut on the 18th of February.
Yep.
If we get a 0.5, then clearly, yes, I think it's all but locked in. If we get a 0.7, it's that sort of finer deal that a 0.1 difference can have such a big impact, because it does sort of lead to that annualizing sort of 6 monthly data or even quarterly data to get to the 2.5%, which obviously a 0.5 brings you a little bit below that. A 0.6 is about that, and a 0.7 is a bit above that. So that's the sort of number I think will be the catalyst. And I think that's what the other reports that I've read, over the weekend and whatnot, sort of have that as the sort of bingo card for rate cuts. A 0.5, yep, or lower. A 0.6, probably. A 0.7, probably not. And a 0.8, no way, Jose.
Okay. I'm looking forward to it. Do you like these sorts of weeks?
Oh, I love them. There's stuff to get your teeth into. I was sort of lamenting that last week, a week without data is like a September footy final series without Collingwood playing, and this is a Collingwood fan. Sure, you watch the game and you see things evolve, but it's not quite as exciting as when there's lots of news coming out.
A few other central banks this week are meeting as well. The European Union, Bank of Canada, US Fed, they all matter too.
They certainly do. And of course, they've been the ones that have been cutting interest rates. And so we'll see what they're going to be doing with rates. And of course, last week we had the very low inflation number from New Zealand, and another 50 points is priced into New Zealand for a few weeks' time. But for the Fed, it's probably no change. The market thinking now is that with the economy maintaining momentum. And a couple of weeks ago, we had that solid jobs report out of the US that they don't need to cut. And of course, a lot of Fed officials have come out and said, look, the Trump tariffs could be inflationary. So probably a pause from the US, which is a big deal. Europeans and Canadians, well, they're dealing with very weak economies. Inflation's nice and low. I think the Canadian inflation numbers that came out recently were below the Bank of Canada's target. So we've pretty much got 25 basis point rate cuts baked into both the European Central Bank and the Bank of Canada. Fed on hold, our inflation numbers. What more could you wish for?
What a week. Stephen, enjoy it.
Thanks, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.